I know we have been talking a lot about the Bank of Canada and their interest rate decisions lately, but because it has such a huge impact on not only the economy but the personal consumer, I figured we would touch on it again since we heard from Tiff Macklem speaking at a conference for the International Monetary Fund this week. We're going to be breaking down some of the things that he said, especially that autopilot comment. We're also going to be factoring in some other decisions which could impact the overnight rate even further. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you're enjoying the content, please consider hitting that subscribe button and turning that notification bell on. It was a huge week last week when we saw the Bank of Canada raise interest rates by 50 basis points, a move that hadn't been done in so long. We covered that in last week's video, but obviously the most important thing that we can try and do is forecast how high rates could go. Now, I know we talked about predictions for this year, and we've heard the rhetoric from Tiff talking that the Bank of Canada needs to get to a neutral rate. Now, we've learned in this past week that the neutral rate is in between 2 to 3% on the overnight. We're trending at about 1% right now. And we're going to learn a little bit as to why he thinks the economy has recovered or where we're at in this current period. So we jump over to this Wall Street Journal article that we were able to find. And what we see here is that there is momentum in the economy. We have demand outstripping the company's ability to supply goods and services required. The labor market is tight, wage growth accelerating, households have accumulated excess savings. So this is obviously where we're getting into the point of saying the economy is starting out on its approach to a healthy recovery. And that's kind of reflected what we've seen in the inflation numbers. Now, this is where the big debate really comes into play. Is it demand inflation or is it supply caused inflation? I think that's where the Bank of Canada is having such a difficult decision, or having challenges as to what they are coming out with, and they're almost being reactive. We're seeing inflation hit 30-year highs, and they're reacting by raising the interest rates in such a huge manner. Tiff has come out and said that he prefers 25 basis point hikes, but we also have analysts and economists coming out and predicting that the next meeting in June could be another 50 basis point hike. So what is going on? What's going on in the background? I think what we need to do is take a step back and look at the supply side, because that has definitely been one of the big challenges. So we're going to move over here to a Financial Post article and get a little bit of an understanding as to where we're at and how we got here today. So we see Macklem says the surprises in the March inflation's numbers were primarily the result of the ongoing supply constraints. He flagged the increases of prices due to appliances, furniture, automobiles, and food prices now, obviously, with the struggles that are happening in the Ukraine. So we see these increased inflation. This is due to the fact that the ports are just congested because people over the past 2 years were sitting at home and they were buying things because they weren't able to spend money on services, on restaurants, on being able to get out, and obviously all that money focus into the retail component, investing in your backyard, renovating a room. And we almost have to take a step back and think, what has happened in the past 2 years? Well, we saw the zero COVID policy in China shut down that economy in early 2020. And we fast forward to today, and we're seeing that same policy come into effect today. So we're going to show a chart right here, which gives an indication of how many ships are waiting outside the Shanghai port to be loaded. Now, Shanghai is in a lockdown period right now. They say the port's open, but there's a lot of trouble getting the goods to port, and that's with truckers and having to go through quarantine period. And a lot of people they don't want to be the truckers, they don't want to go to work because they know that there's going to be a prolonged quarantine period. So we see this red indication is how many ships are actually waiting to be loaded. Now, if we've learned anything about supply chain, and I've definitely covered it before, so I'll link a couple videos above that you can check it out, is almost this supply side congestion has led to the inflation. These shipping prices have gone up 2, 3, 4x in just a two period span, and it's because there's no fluidity in the global supply chain. We have issues at origin, not being able to get the goods on the ship. Then all these ships start heading into North American ports, and it's creating a backlog there, whether it's the LA Long Beach with multiple ships waiting to be unloaded for days on end, if not weeks, months. And then we have a trucker shortage problem in North America. That is another problem in and itself. And until we create fluidity in the supply chain from start to finish, we will continue to see inflated shipping prices. So it's almost like we're heading into the next quarter inflation print, and we're seeing even higher numbers. So if the Bank of Canada is being reactive already based on inflation today, you're going to expect them to continue to be reactive. So that is definitely something to consider. It is a huge problem. Now, another thing that's coming down the pipe, and that was highlighted by Derek Holt, who's the head of capital markets for Scotiabank. And he said that inflation could pop over 8% next print because Statistics Canada is adding in the used vehicle prices into the CPI. Now, if we've seen the Manheim used car index, it is absolutely shot. This is because the automotive companies haven't been able to bring new cars to the market, and that's put a higher value on the cars that are already here. So the used car market has absolutely exploded. So we see here that the supply chain congestion will continue. No doubt about that. We also see that the CPI is going to take into consideration some new things. And you almost have to take a step back and take a look like what the forecast is. And we can see from this Reuters article here is that the inflation expectation will fall from 6% in the second quarter to about 2.5% in the fourth quarter. Well, just these two factors alone, the supply chain and adding the used car index into inflation, seems to me that this is not going to be accomplished. And we're also playing this fine line between demand and supply, where the Bank of Canada has to raise the rate and take a step back and wait for the data to see if the economy will falter. Now, that is definitely one thing that they're trying to mitigate, and it's definitely a challenge. But, you know, we have been experiencing super low interest rates for so long, and we could almost see the Bank of Canada getting up to that 2 or 3% on the overnight, which is a 1x or 2x from where we sit today. So this will definitely be impacted, like we talked before, whether it's your loan rate or your mortgage rate. We could be heading into a period where the Bank of Canada puts us into an economic slowdown. And, you know, we're really trying to toe the line because we're battling this high inflation. We're battling so much money printing that's been done. And they haven't really ended that quantitative easing as well. I think they've tapered from $4 billion down to $3 billion in bonds, which is they're continuing to expand the balance sheet, which we've seen has not been fluid. So it's really the debate between, is it the consumer demand that's driving this inflation, or is it the supply chain problem? So let me know what your thoughts are down below. Do you think it's demand? Do you think we have a healthy economy? People have been saving up, or do you think it's because we're seeing all these ships stuck? We're seeing all these other problems. And if you're still here with me, I appreciate your support. I know this is a hot topic. Bank of Canada, our economy, what we're spending for our mortgages. And yeah, if you're still here, you're enjoying it, hit that like button. Hope you all have a great week in the markets. Happy trading.